dancing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. Than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. Let's get into the charts, shall we? Booyah! Boom. Alright, so I don't know, it's just pretty cool how they kept true to this fan thus far and have seen downside now, and we're getting back into this 706 region, and I don't know, are we gonna refuel and come back up here? I have no idea, but it's been holding true as they offload positions here on the daily time frame. And yeah, this is the Coinbase chart. I don't know anything about, I'm not gonna be like a news channel, but they had the Coinbase FUD and the Binance FUD, but all of this kind of gets inbuilt into the charts anyway, so you don't really need to follow news to trade it properly, if that makes any sense. So yeah, it's pretty interesting. So let's go right into it, shall we, with the liquidity heat map. What is the heat map? Well, it's where people lock in their liquidity and refuse to remove it, and the market maker burns it to a crisp. So let's see who's crispy, shall we? Let's go into the pools. So we were talking about previously that these guys who jumped the queue with their giant bubbles of liquidity, and yeah, they went down to it with a passion. They didn't like those line cutters so much, did they? And they just came down and just knocked them out more than I thought. Actually, I thought it would I was very conservative, just being happy with this amount of happiness being taken, but it just went down with the fury down into the older pools, and it's been holding in such a manner where it has. Let's go look at this in more detail on the 1 minute time frame. So they came in and they V-shaped back out to grab some of these late shorters that shorted as it was dropping, and they just came up and V-shaped those guys out of the game, and then they started to play around with some small pools here and there as they went back and forth, and they started to get more shorts, came up and grabbed the shorts. Now they're getting more longs. Are they coming back down to these longs down here that opened up here at 26, 27 even? So they could be coming down to these regions here. So it looks like they're just swatting everyone off like flies at this moment, and they induced a fair amount of liquidity on both sides here on this last rise up and retrace idea. So you have a bunch of bubbles here that are appearing on the 1 minute time frame. This is the 1 minute time frame of high block, which provides you with 6 days of data. So since it's forgetting a bunch of data before, it's now getting thicker in terms of short liquidity located to the upside, 8.8 billion in imbalance up here. So you have a noticeable pool, which we were looking at before at 28 even, and up above at 28.4 for extension levels of juiciness to come back to if they decide to knock out and move forward. So the previous pools that got knocked out completely are now being entered in here, some thickness being added from this wick, and if it does come down lower, the 26.2123 region is a potential target. Let's go into the higher time frames to see the other pools as they exist, shall we? How's everyone doing while we get this loading? Crispy!
Fatality.
I love stream decks, they're really cool. Boom. So yeah, while that's loading. Yeah, so this is still looking like they got some stuff up here at 29k in terms of some juiciness that they could come back to on the 7 day. There is some immediate few billion down in this region. 1 2 3 4 5 6 7 8 9 billion in this immediate region, down to 26.3 on the 7 day if it continues lower. Down in the juicy regions, in the nether regions below, 25.350, it's 3.6 billion and 5 billion down there. It's not super impressive in terms of large amounts, but you got it caked up even Steven so far, with a little bit of spiciness down here at 26.450, which coincides with the 1 minute time frame here. Okay, alright, so let's go out of this and into the monthly. We held the monthly due to its ambiguousness of which side they were aiming at the other day. We were saying these pools were starting to get thick now with the narrative of a possible path being laid bare to the downside, and they started to eat into that liquidity. Are they going to continue lower as they go into this? As the 1 month time frame gets thicker, you previously had 6 billion, 5 billion at 25.2 at March 20th, and now you have 12 billion there. So they've induced a good 8 billion more in. So all of this has been caked up nicely to start creating a path for that to go to. If you look above, you got 3 billion up at 27.50 and 3 billion at 27.9. So it's not as thick in liquidity up here by comparison to go lower if that's the target they choose to go. How the weekly structure works. So you normally have Monday as a false move day. Shout out to Tino from Traders of Reality for this. You have false move Monday, Tuesday, Wednesday is the move for the week, since Monday tried to give the downside. So Tuesday's been consolidation thus far, so New York will reveal where the move for the week will be. Will it be a similar path to what we saw back here on March 23rd, where they come back and inverse Bart Simpson out of here? I don't know, but there is liquidity down below, so if you were to head lower into these pools, then Wednesday could also see a continuation down lower into the pools, and then Thursday being the midweek reversal out of there. They haven't really followed this structure I've noticed in the past few weeks. There's one indicator you can do that is like week smart money concepts. I just do like SMT smart money Thursday boxes, and this will put like every Thursday reversal on the charts. So you have like Thursday, and then they started to shift out, Thursday, and then they started to shift out, Thursday, and they started to shift down. So you have your midweek reversals. There's other things that put the days on there, but trying to notice the weekly structure is a good kind of rule of thumb, and keeping an eye on what time frames we're in. So another free indicator for that would be ICT kill zones by Tradinator. On lower time frames, it'll start to break up your ranges. We're in the New York trading range, so you can kind of see how they traded. So Asia kind of dropped it and consolidated, setting up for London by rising, and then London dropped it for New York, which took it up, and we've just been seeing this sideways consolidation. So we haven't really seen a clear move either way since the end of New York dropping it. So New York started to drop it in the pre-market. So where are we going to see this play? So if we go into the 3 month, I don't think we need to spend so much detail, but we did see this yesterday, how these were starting to get thicker in terms of downside pools, which is starting to pave the path to the 22.4 region perhaps, and then the happy campers down at 19.6 and below. So you have a good chunk of liquidity down here that's refusing to close, so these become interesting pools to take. They left them alive last time unscathed in February at the March bounce on the 618. Are they going to leave them intact this time as well? I doubt it. If they go down to this region, this is likely going to be a target down at 18.8 with its 50 billion and 18.6 with its approaching $50 billion, so 100 billion down here at the 18.6 region, which we have yet to go see. So if they start to break these lower lows and knock these guys out, then this is an approach to possibly going to take the 200 billion that we saw on previous lives down at 15k. So you have that 200 happy camper setup down at 15.2. That could come into play if they go into those regions. If you look just above, we do have that 100 billion just at 19.2 beckoning to say one last hit please. And you do have some up to 30k region, but not nearly as much, about half of that. So the 19.2 seems to be the conservative idea. And yeah, so you got, if you got 18 billion at 26 even and 20 billion at 28.4, it would seem to be that 28.4 could be a more juicy target on this yearly time frame. Interesting to say. So let's go back to the monthly and look at this 1 month with a little bit more fidelity to the image. So I was looking at this guy up here at 27.52. If they were to shift out of here with the shoulders, head and shoulders out, it would put you up in this region for the 25.52. I'm surprised they consolidated after this. I guess they had enough bubbles to come back to come down and take here. They're starting to see those bubbles appear again, and you can look to the far right and see the length of these poles to see the amount in millions. It goes from zero, my head's in the way, from 0 to 50 million, 100 million. So the length of these sticks tells you the amount in total in this region. And so you can kind of compare by the black level we're at currently, which kind of looks like a more juicy, appealing target to where we are currently, and it might be down to the 26.85 region, but we do have some stacked shorts up here at 27.67. So this kind of region up here at the initial drop seems to be a kind of gravitational point for those 50x that haven't closed just yet. It all depends on how many longs have been scared out of the game, because once again, the dead weight, which we saw, which I was talking about here, this dead weight ends up becoming the drag on price. So the longs end up becoming their own demise. So you want less longs to get the hint as we go up, which is why it was a perfect idea to shift out from 19 when everyone was in their most FUD state. It just shifted out while everyone was not afraid to open. So there's these huge gaps in liquidity that took a while to thicken up here. So it took a good 10 days for it to start getting colorful here, and then now 20 days later almost, we got this thickness to come back to approach down to this region. So they just had their fun going up in this way because of all the fun. Let's go ahead, let's see what you guys are saying. So we got at APV, thanks for coming on in everyone, 8 concurrent viewers, thank you very much. So we got namaste, yeah, namaste. Audio sounds great on my end. Love the Thursday tip. Would you mind taking a peek at Mask 3L? Sure thing. And yo, Crypto Randman, yo, what's up? So we're gonna go to the other charts. Just noticing that we had that kind of near 618 bounce on that Coinbase chart on that pitch fan. It's kind of interesting. I'm gonna turn off that SMT box, the Thursday box thing, and go to a higher time frame. Here we go. So it was that 4-hour cloud we were talking about yesterday. We'll get into that in a minute when we go into the 0 point space. Alright, so we have this impulse to the downside on the daily time frame. We have the 706, the 66, the 65, the 618 in the pocket here, and this seems to be the region we are in. We previously had an impulse up here in the 618 was negated with the fury of the impulse to the downside, and we saw a bounce on the 786 of this bullish trend-based fib extension on the daily. So that's kind of interesting. We kind of wicked off that, and then we're starting to reclaim some of these fibs on the daily time frame for the 6566 region. So that's kind of nice if we can maintain this, if it's going to go higher. So it could be a fake out if it does go up to this higher region to get to aim at 29k, or those conservative targets we were looking at within that idea. It's up to like 25 or 27.6, knocking out those 50x over here at 27.7. Once again, all of these longs also opening, so they're becoming dead weight. So not to be, but yeah, I like where the fibs are at. We got this impulse retrace idea 236. Unless we can maintain this 236 at 27.5, it's all for naught. It could be a bearish retest to go down into the pools. If we do see a bounce, it could go like so, rejection, and then back down. So this 236 of this impulse retrace of the initial stall out here on this rise up gives you this kind of equilibrium point, if you will. It probably equals the equilibrium if we took a fib from this to the top, actually. Like if we went like this, the 0.5 is slightly higher, so it's a little bit lower than that. It's giving you that first scent of bullishness, I guess, if we can maintain. So it's all about maintaining these levels, these little nice fib levels, and I don't have the entire thing saved. You can edit your profile, so you can save templates. So if I turn on the basic, it has all the levels for everything, and yeah, that gets a little bit busy for the eyes, so you can just put on like the pocket, which is the 618, 65, 66, 706. I've heard people using the 66, so I'm not quite sure why, so I started putting that on there. But I do see what they're saying. Sometimes it does bounce off the 66, so I just leave it there. So if it goes into the 618 like it did here, it could go all the way down to these regions. I think it's a way for calculating a stop loss for an aggressive entry. Not quite sure. If someone would enlighten me, that would be cool. So yeah, that's it. So let's go into the 0 point space. Hi everyone. How's it going? You chilling? It's 12:35 where you are, so technically you're not lying. Nice. How's black looking to you? Nice. Cool. Well, we're gonna go back into the charts once we get the everything upgraded here. All right, here we go. Back into the charts. Flat out. All right, so if we come back down into these regions, you got the ATR and the cloud down here on the daily time frame, and a fair value gap that we calculated a long time ago that could coincide for a retrace down here at 23k ish if we were going to come down. The one thing to note on the daily time frame is that the daily is resetting quite nicely. And what do I mean by that? Well, you haven't really given back much. You've gone kind of sideways. If you compare from the 18th to now, we haven't really gone anywhere. If you just think about it that way, we've just gone from this level to that level straight, and the daily time frame has reset itself. The one thing to note is the Williams has kind of come up nicely into this overbought region, but the average has come up very smoothly, and it could bounce off itself for some double tops like the top of the mountain. I often look at this mountain range outside my house as I'm hanging the laundry and notice the similarities in these, like, you know, peaks and valleys of the mountains with the Fibonacci and everything. So you could see some sort of, you know, thing like this, it would be alarming once we get that alarm cross. So we had that alarm cross on BTC, and that was pretty deadly for when it reset. We didn't really get that to that level here, but we've kind of brought the average up to a similar space. Oh, whoops, I have the delay on. So we have the similar space up here. The space was what did it for me. Space. The final frontier. So yeah, if we're kind of reaching the end of the road here, you could kind of see this come up, or you could come down out of here. You were seeing this reset even when we were rising up, which was interesting. So are we going to rise up in a similar fashion before we fade? I don't know, but it's interesting to note. And if you're just, using Momentum Master, link in the description or in the chat, momentummaster.info, you can kind of see each component at the features thing and read about what we're talking about if you don't have it. But if you do have it, you can go back and just back test like I'm doing here on the live. Everything is kind of like a tutorial, if you will. So you're just going back and seeing, okay, well, when did we get to that point? That's why we have the dotted lines. So we're at this point above the last set of dotted lines here on the Williams. So when did we get to that level, and what happened when both the lines were up there? Well, we kind of hung out there and kept going higher. Interesting. Are we going to do that again in the same manner? We had that same angle, same curve. So is it going to be that immediate? Like here, it was a little bit more abrupt and immediate because we had some gap here and it was more aggressive. Are we going to see that same aggressiveness even though this is here? Did we have that again at that same level when we reached up high? We did do that back here. At the top, we had kind of a rise up here and then dropped down, had that alarm, aggressive alarm, went sideways. So the price action gets kind of more detailed as we go forward in time. So when I look back here at 2021, this seems so infantile to me because it was so short. We had basically, this was like 23 days, but we still had like a lot happen in 23 days over here. A lot more drama occurs now than back then. So it's kind of hard to get a clear sense, but you can kind of get senses with these levels. And the MACD, where's the MACD that's traversing both domains going on the daily? So the MACD, did we get that cross down we were talking about? Yes, we did. We talked about that cross down on this yesterday before the daily close. We were saying this was pointing down and possibly crossing, and then that will give you that aggressive dump. Okay, so if we go to the 12-hour getting suppressed by the daily, no sign of abating on that from the MACD lines here yet. Money flow coming down beneath the RSI. Williams also aggressively resetting. Next close in 10 hours, which would coincide with the daily candle close. If we go to the 6-hour, 6-hour also getting that reject on the cross, dump down, reset, hard reset on 50. The ambiguousness of it was not to my liking. Alongside that 4-hour thinning cloud, we had this coming down, so we're not yet in that green space similar to here. If we get this low with the green in this region of the Williams, you can get those rising sun potentials, but we're not quite there yet. So something to be interested in. And then if we go to the 4-hour time frame, 4-hour time frame kind of hanging sideways while things go lower, volume decreasing here slightly. selling volume decreasing anyway. Kind of not really showing signs of life or signs of going lower, but could just make that one final dumperoo with the Williams here not being in green just yet. It could come down further here, similar to this. Okay, and if you go to the 1 hour, alright, so the 1 hour was attempting to double top. You still do have that momentum on your side. The lines are not closing or curving, it's pouring up like a garden hose. And the MACD, which is previously attempting to cross down, did bounce off of itself, so that's opened up again. The Williams got green for a moment at midnight as it was aggressively dumping, and then we started to see that meandering out with the V-shaped recovery. Interesting thing to note is we have a higher low on the Williams, and yet we have a lower low on the price. So this is what Renier was talking about, and I believe a few others. They were talking about divergence on the Williams. So you have divergence here on the Williams and on the RSI. The look back on my calculations is a little bit more conservative, so it didn't appear on the crystal divergence, but it is something to note here. It could have already played out with this rise up and rejection of the cloud. The cloud is pretty thick here. This is why you saw this surge up and rejection here, and the baselines are scooping beneath the price in the manner we like, coming beneath the price on the hourly. We got that crossover, but it's been struggling with the FUD news of Coinbase and Binance, which is what's causing people to fear to enter. But let's be real, the people that are causing the price to go up and go down are not people, but it's the exchange and the liquidity providers themselves. And the only thing they care about is this. They don't care about the news, they don't care about feelings, and they'll care about what the feelings they induce cause you to open a trade with the liquidity. And this is why they will do things like this and just come right up and grab it, because that's what it is. It's a game of traps. So trying to find out where the trap is laid and what's being about to be sprung. Is it going to be a V-shaped, not a V-shaped, a inverse Bart Simpson out of here? I don't know, but they create these traps to the upside. Here was a previous thick cloud that they just totally ignored as not being there. So with that aggression, they could come back. This is an entire fair value gap as well, as you can see by this box that's drawn around my candles. That's not on Momentum Master, that is a free one you can get yourself by typing in fractal break imbalance fair value gap liquidity void, and it will auto draw those on your charts. Okay, so you're getting the higher time frame suppression happening right now. You are getting some cumulative volume come in over the time frames here, so there's interest building for buys rather. You had pretty even Steven selling, now shifting to the buying side on the hourly, but this is cumulative, so it's going through across all these time frames. You're starting to get more volume entering in the last 3 hours. This could be a kind of narrative shift. They call this like a break of structure, because you broke up above. You didn't really break this high just yet. And yeah, let's go to the 15 minute. Okay, so the 15 minute previously had this volume exit, and then we started to see it taper and thin, and we're starting to see more thinning, and we're at the cusp of it shifting back in our favor, although we are beneath the cloud and getting sell-off wicks beneath the cloud, which we saw before on the 4 hour. Let's reiterate what we saw before it happened. So we saw this thinning and kind of selling, meandering around with the cloud thin. We couldn't close a candle above the cloud, and we were saying that we were likely to go down, and we did on the 4 hour time frame. That's a pretty heavy one when it's curved like that, so you have to be mindful of the 4 hour cloud. And the 6 hour was also starting to get thin up here, so if we do make it up and we can't make it to reclaim this cloud and open it up again, it could be the end of the road for the upside idea, similar to here. Okay, so we go back in time to all these times where the cloud shifted on the 6 hour. So check this out. It started to shift. Granted, we shifted here and we went up about, but right about where we're at was like about here. So we broke down, and then what if we do something like this where we surge back out, inverse BART, but we can't reclaim the cloud? Looks kind of similar, doesn't it? I mean, you got, that looks like eerily similar actually. Like you got an inverse BART, and then you could have an inverse BART and then dump. So you had an inverse BART dump over here. Check this out. Inverse BART, dump. So, and then the cloud was thin on the 6 hour, and we started to see that dumperoo after. So you could look for a nice short on the 6 hour time frame if we cannot reclaim some sort of cloud rise out of here, of the shiftiness of it curving. So let's go back to this once again. So we have an inverse BART. Are we getting another inverse BART up here to flirt around with the cloud, and then we dump down? Interesting. That's the 6 hour cloud. So different things become more prominent at different points in the journey of the price action. So as you're back here, for example, the cloud it looks very healthy. There's nothing really to take note about it. But as you start to get to this region, the cloud starts to become a more prominent piece of the puzzle, right? So everything is like a piece of a puzzle that you look at. It's not like you need a prerequisite of the cloud on your side all the time, but you know, when it starts to thin, a potential reversal is in. So you have this volume weighted cloud formula, the trend cloud. So that is how it works, and we saw that play out yesterday with the 4 hour time frame. And so the 6 hour has yet to give up the ghost, so to speak. So we could see a surge up and play around with it while it starts to shift and dump on us again. The hourly time frame is getting overbought, but that's just interesting to note about the. And then this was your first sign of reversal back here when you had this cross down event, and then we've seen the baselines staying above the price the entire time, telling us game is over, kind of. And let's go to the 8 hour. Let's just see what that is. So you do have this thickness that's still appearing here that takes a little more time to turn. So you had the baselines above price from back here telling you that the fatigue was starting to set in. What are the baselines? Once again, they are the first sign of reversal. So they are your leading moving average formulas. So getting above price here shows the suppression occurring before it occurs. So let's go back down to the hourly time frame and investigate that a little bit more in detail, shall we? Let's see how you all are doing. So it says, damn, there's some mushrooms in my coffee. Your voice is tripping me out.
What do you mean, tripping you out? Hey!
So I can imagine this recording is going to end up in some progressive trance remix. Nice. I just moved to Australia. Oh, nice. That's right, I saw. Congratulations for saying cool. Thank you for your trading skills in the next level, blah, blah, blah. Thank you very much. Hi, thanks for asking. Good so far. Just slowly getting set up. Need some stuff. Australia region. Nice, Australia. Yes, sir, the fractals. Fractal. Nice, I like NordVPN. Cool. Just trying to catch up on the chat. It's nice to have a chat that's going on at the meantime. That's a first. Congratulations are in order. So if we look at here, this cloud, which is thick, is attempting to make some sort of pierce of the cloud by the looks of it. As of this moment, it all depends on how this double top momentum on the hourly plays out. We'll go into the S&P in a minute, but you're getting, wait, where's the money flow on this? So the money flow and the RSI is even Steven. I like that. So you could still see that money flow surge up. Once you get the money flow above the RSI as you did here and you're getting overbought, these are the things you can look at for those little quick scalps if you're trying to get in and out real quick and try to get a little bit of a percent here and there. This is what, like if you were trying to, oops, wait a minute. Date, price, and range. Yeah, like if you wanted to get like 1.5%, like these little gaps, these disparities between the money flow and the RSI are to take note, and the bearish divergence of the money flow being above the RSI are to take note. See, it was back here. You were on that before the dump. You had the bearish divergence crystal of the money flow play out. So these are the things that you see when the bearish divergence appears and it's above the RSI, and you happen to see that coincide with the 4 hour. That's your kind of clue above all else. So if we go to, yeah, the hourly is starting to do something, but if we look at the 15-minute, let's just see. 15-minute trying to do something special here. You got the ultimate formula with these alerts that come to your phone about the time frames being exhausted, and if they match your fib levels that you believe in, then you can kind of take them to the upside or the downside. If you believe the cloud is going to fatigue there, you can get out conservatively, and you could be scalping the living daylights out of this, doing things like that, and then possibly switching positions to the other side if you were, and wait for some sort of level to be hit. And so you would have gotten this too, and they're all leading, so they appear in the moment, which is pretty cool. So if we go to the 15-minute, yeah, this is the money flow getting above the price is not really good here. You're getting money flow above the price, above the RSI. The RSI is saying not gonna do it, Dana Carvey. And you could get that suppression on the 50 here, and the MACD just says no to the stochastic unless it opens up here. Alright, so we'll come back to that in a minute. Just flirting around that 27K region, just going sideways. So if we take a fib retracement and just go from the bottom of that to the top, the tippity top, which would have been that V-shaped, we can just put the basic on and then find that equilibrium point, and we are at that equilibrium point kind of now. And you could do range trading between that. We could do it the opposite way, so you can get a kind of sense for premium versus discount. So we'll just do it the opposite so that you get the 236 idea. So the green 236 would be your long entry, and then you get out at the 618, and it looks like that's what people are doing, kind of like as soon as we get to that premium region, people are getting out, and then we are getting sometimes up to the 886, and then this range trading scalpers sideways motion is what people are having fun with, from the 236 up to the 618 and out again, or aggressive entries on shorts and riding them down and getting out below equilibrium at the 0.5. So you could be using that as a tool, using the fib retracement of just that V-shaped impulse and seeing how we're going sideways here for the interim. So let's go look at the S&P, shall we? Let's see what's happening with that. Looks like we've dropped a little bit. We did not hit the top of the channel, but we did go down in the similar fashion, but we went back up again. Let's go see where we are currently as we go to higher time frames. Getting a thinning of the cloud here, and beneath it now we had previously seen a nuke over here which did not close on the hourly by the looks of it, but we started to see the 5 time frames fatigue double top idea starting to ensue. Basically the idea of coming down to this is starting to happen today by the looks of it, so we could come down to here and bounce at some level at the 236, I don't know. So the hourly and the 4 hour kind of coming down on you now, 4 hourly coming down, and MACD crossing below itself, potentially speaking. We just had an hourly close for BTC, but I just realized that the stocks close in 30 minutes, so they don't coincide in their close. There's 30 minutes for the candle close on the S&P. And we have the 4 hour just kind of hanging out all together. All the indicators are kind of chilling in the same zone, figuring out what they want to do, being ambiguous as they are. Looking like it wants to possibly come down for a hard reset with the hourly. The 3 hours to do that would coincide with the hourly reset. And you wanted to look at Mask 3L, so let's look at that really quick. Mask 3L, Mask.3L. Where's the 3L? Mask 3. There we go. If I just type 3, it's Mask USDT.3L. Is this the right one? I hope. Is this right? Yeah, Shingo Nakamura. This mix is pretty cool. This is his like live set on a boat in Tokyo. I'm kind of doing copyright infringement right now, but I don't care. I'm not monetized anyway. Yeah, it's looking pretty healthy despite everything going on right now. It's kind of like holding in this flag-like structure, and you have like the 15-minute, but the hourly wants to come down with the 15-minute right now. You are seeing the adaptive and the weighted below price here, which is what I like to see on the 4 hour time frame. And wait, the 4 hours reset. Oh, okay, yeah. So it's the hourly and the 15 that are kind of chilling right now. Yeah, the hourly got overbought and didn't really do anything but go sideways. That's not really bullish at all. So you had the hourly go from oversold to overbought and hasn't even gone anywhere really, due to the Bitcoin dump most likely, but you could see that come down a little bit more. Where would you see that come down to? if you don't want to have some problems. Let's turn this off really quick. So you would take the retracement tool, start from the impulse to the top, and we already had a 618 bounce. So you could come back down to the 618 region or into these other pocket regions for a liquidity grab of these previous induced longs if the hourly does not hold the zone. But ideally you'd want to see the hourly reset itself in a nice way. We're currently beneath the adaptive on the hourly, which could see a rejection. If we go like so, trend based, we can use the same idea, go to the top, retrace, and this coincides with the adaptive. If we can't get above the 0.8516 region, then this idea of breaking out to these regions is null and void. So you ideally want to see kind of a reclaiming of that 0.8516. If we could go up on the hourly slightly and come down and take the 15-minute down, and reset one of those time frames while the cloud shifts. It looks like we're getting rejected at the cloud as well. Hold on. Yeah, same kind of dealio, but if you pierce the cloud and then the cloud starts to shift in a kind of manner like so, and it starts to thin out, and then you come back and retest that cloud on the 236, that would be like a cool idea, I think. If it does something like that, we'll come back to it. But you could come out here if you were already in from down here or something, then you could kind of see a last hurrah on the 15-minute right now. The 15-minute could give you some saving grace, perhaps. And then if it gives you that saving grace and resets the hourly above this 236 with a reset of that, then you are smooth sailing for potentiality to the upside. For Mask 3L. This is the 3L token. I would assume the regular asset would be in some similar manner. I don't know. Wow, more cool stuff. GGG. Nice. Getting some requests. I like it. Some action. We had a previous unable to reclaim that 236 idea. We were talking about that same idea, and until I can get above that, I was not interested in it. But it looks like maybe you guys are trying to still find that specialness, and it got kind of dumped out by BTC. So this is now, oh no, we're getting to the end of the road on the music. End of the road? What do you mean, end of the road? It's being very dumperoo. It's more of a aggressive dump now. So you have reached into, if we go from the lows to the highs now, let's just basic it up. We're coming to that 786 region on that. You are getting those 5 time frames oversold. You're seeing this meandering around of the price. Yeah, I mean, you're getting to that kind of dumptastic level of everything being oversold except the weekly. So the weekly is kind of in a state by the looks of it. So the weekly is on the outskirts of the Keltner channel and could come all the way down to this fair value gap on the weekly down to here. Like, it is overbought on the weekly time frame, although it is a new asset by the looks of it in terms of it's only seen downside really, but it could come down to these regions just on the weekly reset. There's no guarantees that it could continue higher, but I see what you were seeing in the original idea of that inducement of that rounded out resistance. But we have kind of broken the neckline of that idea, so the cup is not a really real cup if you can't hold the neckline resistance levels. So we can just take it for the value of the falling wedge idea. What is the market cap on this? Pretty low, sub 1 million. So, or not market cap, but the volume, trading volume, the lubrication, the liquidity. So there's very little liquidity. I don't even know how it's being traded at the moment. So these candles, when you start opening up in lower time frames, start to get more wick-wacky and sparse as less trades occur within that time. So it gives you the false impression of price because less things occur in that time frame. So it's kind of hard to buy it as an idea for myself personally. But yeah, you are due for some sort of thing. It's kind of like a falling knife at this point. 786 is your last hurrah, for me anyway, because you're reaching the bottom of the barrel for these little jagged teeth smile resistance levels, support bounce levels. I mean, you could get that 886 last hurrah, but when you get into these red zones, it's kind of like bottom of the barrel. That's why they're red for me. That safe entry would have been at that 236 if it had held. So, don't know what to say. It's kind of, it could keep going to the 786. It hasn't given you any bounce or love just yet. Not really seeing any bullish divergence on this. You are seeing the Williams and everything in a nice spot on the 6 hour. So if you just play the 6 hour and just let it chill, then you could see something similar to this in terms of upside. So you just go back and back test, where did you see this green level before and these rising suns before, and what happened? Well, we saw this occur, 47%. So are you going to see that same thing again? I don't know. How many times did it happen? Did it happen again here? How much did you get? 36%. That's pretty good. So if you just play the 6 hour crossaroos on the low Williams like this, like the last time we had a rocket ship down here, and then you had that was 50% down here. If you had held it, 200% and more. So yeah, when it gets to those regions, you could see some sort of bounce-a-root, I think. Let's go back to BTC before we reach the end of the road here. So I want to do a recap as we get out of here from where we were looking at the 6 hour time frame. It looks like we're holding that 27K region. We're going to go back to the liquidity real quick and talk about the pools and where they're stacked. So we got the 2773 region that's kind of looking thick up here. Some really thick shorts. If I go into the bubbles themselves, this guy at 2752 is quite large, 238 million. They previously got his partner down here. So are they going to come up to this guy at the bare minimum and maybe up to 2781 for these shorts that refuse to close and decide to pool up in these regions? This is looking pretty cool. You got more thick bubbles here than you have thick bubbles here on the 1 minute time frame, and an overall imbalance to short liquidity. If we go to the immediate, what have they induced? Are they coming down to these 35 million? There's another guy up here for 30 million, so it's pretty even in where they could go. So it could come up either way, but in terms of the imbalance, it's looking like there's more juiciness up here for inverse Bart Simpson. We went over the idea of that inverse Bart Simpson. We previously had one here. That was last week or so. And then here was another inverse Bart Simpson dump. So if we did get an inverse Bart Simpson, you'd be looking at that 6-hour cloud for the next stage of whether it drops for that shoulder of the right shoulder or something. So if it comes up to here and fades, then you could have another leg down aggressively. But you do still have those pools on the higher time frame up here to take as well. And the monthly time frame does have these caked up paths, but still by comparison, if you juxtapose it on the yearly, it's only like 18 million at 26k as opposed to 16 million and 20 billion rather at 28.4. So the immediate price from where we're at is possibly to return up. Possibly. Could it be a bear trap? The hourly time frame suggests that we're going sideways and yet getting overbought. This is a bearish idea. Thick cloud also needs to be pierced and reclaimed in some way, shape, or form, similar to what we saw here on Sunday. So this was getting a pierce but jumped down. So if we did pierce this, you would expect some sort of return to the downside due to the thickness, unless there's some sort of manipulation games ensuing. If we go to the 15 minute, the 15 minute is now getting overbought, but we are reclaiming the cloud here. So the idea here is that you can take these tools, take these ideas, run with them on your own, take the fibs and do it. So I don't need to keep you updated all the time. This is more like a free education, I hope, and then you can take these alerts to your charts yourself and just scalp percent after percent. So if we come up, it's also these will adaptively, that's why it's called the adaptive moving average. This 27,470 region, where would that take you here? 27,470 would take you into these liquidity pools, kind of up into this guy. So you'd automatically have some sort of like image that coincides with what they would go up to the gap and grab. So without high block even, you could just look at these moving averages as reversion paths for liquidity. And a lot of the times you don't want to ignore these 6 time frames oversold is 6 time frames oversold. And for the most part, those things do pop into profit. So you could just take them into profit and close, or take them into profit and set your stop into profit, and either way you win. So They are what they are. I don't need to look at the patterns. The patterns apply to the math inside Momentum Master itself. So, we haven't reached the top of the Keltner channel. If you get to the top or above, you can start to fatigue on the 15 minute and come back down again. If you break these levels, then you could reclaim some of those liquidity pools that we talked about. And that's about it. I think we are good. I didn't get a chance to look at the dollar today, but we might run out of time. So I just want to stick with BTC for right now. But you are kind of seeing this meandering of the cloud on the 15 minute. It has thinned out. The worst of the dumpiness has been reclaimed. We haven't really gone anywhere but sideways since yesterday. So Tuesday has been sideways for the most part. Will the move ensue upon the 15 minute time frame? The one thing to note is the hourly. The hourly. The hourly. What happens with this hourly? Will it fade here? Well, ladies and gentlemen, I thank you for your time, and that is where we will bid you adieu. Let me just play my last song out of here. So let's just say thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, coming on in each and every day, and I will catch you on the flip. Thanks. Peace.